Welcome one and all. Today I'll be presenting you with an awareness session on finance education. Good financial behavior, your savior. The learning objectives of the program will be to enhance the financial literacy, empowering the participants, to create awareness on importance of savings and investments, to create awareness on importance of insurance and retirement corpus, to empower the participants to understand and minimize risks associated with investment through thinking and guide them create wealth, to make participants create an emergency fund that they don't touch unless required as in pandemic, to make participants aware of various schemes of RBI for general public. Going ahead, why at all do we need savings? First thing can be emergencies, unexpected expenses like sudden illnesses, accident, or even death might occur anytime. So we need savings as a measure of security. The second one is future wants. To meet large expenses like car, house, education, marriage, retirement, or any other dream that we have, we need to have savings as a measure of prosperity. The next one is funda to make savings is increase the amount you save proportionally as your income increases. Before marriage, when you have lesser liabilities and responsibilities, make maximum savings. And while making financial planning, you need to consider the time horizon of milestone and money required adjusted for inflation. See, basically inflation is nothing but 5 years ago you might have got Maggie packet for 10 rupees. Now it's 14 rupees. Why? Because as time progresses, the purchasing value of the same amount of money decreases and price increases. Early, you would have been experiencing the same in case of even other products. So we need savings for emergencies, for future wants, and increase the amount you save proportionally as your income increases. Before marriage, make maximum savings. Next, how can we save? You can see clearly we want to know time. It can be done with a Flipkart watch, it can be done with a Rolex watch. When you are at the initial stages, you need not need a Rolex watch to know time. When you are in the initial phase of your career, just concentrate on the basic needs. Don't run behind wants. The first step in managing money successfully is being able to differentiate between needs and wants. As we can see from photos above, needs are a must have, whereas wants are good to have. So, in your initial phase of career, only focus on must have. Good to have things will come eventually when you make good corpus of savings. Wants can be postponed and acquired later. When we learn to identify our wants and inculcate the habit of postponing those wants, we should be able to achieve most of our financial goals going ahead. Where do we store savings? So comes the bank. Bank is a financial services provider offering a wide range of products along with a safe place to store your cash. There are multiple types of accounts. The basic ones you need to have idea are savings account that's used for personal and current account that's used for businesses day-to-day transactions. Types of deposits are fixed and recurring. Recurring is like it you deposit same amount every month or every week, so it recurs. Fixed is the you deposit at once and it will remain fixed. Then there are various types of loans like personal, vehicle, home, agricultural, and educational. And there are various remittance channels like ATM, internet banking, mobile banking, NEFT, RTGS, UPI, IMPS, mobile wallets, Bank Mitra, point of sale, business correspondence. So, how can we make savings? So, here is the funda. Make budget first, transfer your savings next to the different account, and then spend the money that you planned as budget wisely. Budgeting is an important tool for saving. First, you need to segregate all your income and expenses. Now, categorize your expenses as least important, important, and very important to prioritize them while settling them through your income, which is limited. because your income will be limited, but your wants will be enormously high. We need to prioritize what we require, and we need to postpone the other things which are not required. Try to figure out ways in which you can curtail expenses that are not required. Ensure that your income exceeds expenses with as wider margin as possible. The surplus fund after meeting all the expenses would be your saving. It is only after you have assured savings that you can think about investing it in various products that we will discuss as we go ahead. So, budgeting is an art of balancing income and expenses to ensure that expenses are always less than income. The surplus generated, if any case, can be invested for future needs, as we will discuss next. So, as clearly shown, when your income is 10,000, your expenses shouldn't be 12,000 or 14,000 vice. So, it needs to be like your expenses should be minimum to minimum 50% or 60% of your income. So if you are earning 10,000, your expenses can be 6,000 or 5,000. And when you are bachelor, make sure you save a lot, as once you get married, your responsibilities increase, your expenses increase. So the prime is where you can make most of your savings is when you are not married. Next, as we save, what comes next is investment. Investment is buying an asset to generate returns from it over a period of time while also taking care of risk and volatility. For example, if you buy gold and keep it for years with an expectation to increase in its value, it's an investment. Buying mutual funds, bonds, shares, real estate properties, etc. are all various kinds of investments. The prime focus should be beating the inflation rate with the widest possible margin. As we discussed, as time progresses, the purchasing value decreases, so our investment returns after taxation should be able to beat the inflation. How do we do investments? Investment starts only after savings, as we discussed earlier, and investment requires great discipline and patience. You can make an investment for short term, medium term, and long term, and also select the appropriate instrument as per your planning. We will discuss as we progress. It is better to start investing at an early stage of life, as compounding has a huge value, which we will discuss. Once you start investing, the compounding effect starts appreciating your infused capital, gradually growing it day by day. To invest your money, you need to focus on factors like risk, return, tenure, tax, and liquidity. As it's mentioned, you require great discipline and patience. If you are doing a SIP, please don't come out of it even when the market is volatile. You be disciplined, you go investing, as our plans are for a long time horizon, and the markets will get neutralized, stabilized in the long run. So you don't panic and you maintain that discipline. So how avoiding bad habits helps? Because you have a lot of opportunity cost. If you spend amount of money on cigarettes or be it alcohol or whatever, instead if you cut on them, you can make a lot of savings, as it has opportunity cost. To give better idea about what you will save, I assume if you save 1530 per week avoiding bad habits, you can get new clothes, but it will be 6500 per month, 78,000 per year, 4,80,000 in 5 years, which can give you an international family holiday or a good car, or it's 12 lakh 40,000 in 10 years. If you save 1530 per week avoiding bad habits, then it will be a down payment required for your home. You can pay off big chunk of your mortgages. So refrain from having bad habits, and you will be out of the opportunity cost. Next, as we said, compounding comes into a big picture when you start investing at an early age. As shown here, if you start investing monthly 1,000 rupees at the age of 25, you will be investing for 35 years till you turn 60. So the total amount invested will be 4,20,000, but when you reach 60, the amount will be 22,79,463. But if you start the same at age of 35, so you'll be left with 25 years, and you will be investing 1,400 per month, so that your total invested amount reaches the same 4,20,000, but the value of that will be just 13 lakh 28,861. So you can clearly see a difference of 9,50,000 if you start investing late. So if you invest it at age of 55, you will just have 5 years left to invest, and you need to invest 7,000 per month. It's so that it will amount to 4,20,000. It will be just 5,17,000. So the same amount of 4,20,000 invested, if you start early, value of investment becomes very high. It is the power of compounding. Next comes the types of investments. Take higher risk appetite at younger age, as once you turn older, you want to have safety mindset. Diversify your basket of investments. Make SIPs constantly irrespective of market performance, as returns are generated in long time horizon as discussed. And various investments include stocks, bonds, mutual funds, derivatives, provident fund, real estate, gold. And why do we need to do investments? Is to reach our financial goals, beat inflation and earning significant returns. And there are various types of government in schemes that you can invest in, be it public provident fund PPF or national savings certificate, Sukanya Samruddhi, Kisan Vikas Patra, government bonds, which will be discussed as we go ahead. Next comes, we'll be discussing what all various investment options we have, as we said in the earlier slide. So what do we mean by stock? Is a stock, also known as equity, is a security that represents the ownership of a fraction of the issuing corporation. Units of stocks are called shares, which entitles the owner to a proportion of the corporation's assets and profits equal to how much stock they own. Next comes to bonds. Bonds are debt securities issued by corporation, governments, or other organizations and sold to investors. A bond is a type of loan. When a company needs funds for any number of reasons, they may issue a bond to finance that loan. When the time is up, the company repays the bond in full. During that time, the company pays investor a set amount of interest called coupon on set dates. So what's difference between stock and bond is, in stock there's no fixed return that is promised. In bond, it's just like loan. You will be giving a loan to the corporation or company, and they will return it at the end of the period. But stock, unlike is, you will be buying the ownership in the company, so there won't be any fixed returns. If the see, in the long run, obviously companies will earn profits. So when you choose a good company, it will give you huge profit. So that's the concept of stocks. So what is mutual fund? Mutual fund is nothing but type of investment vehicle consisting of portfolio of stocks, bonds, and other securities. Mutual funds give small individual investors access to diversified, professionally managed portfolios. Mutual funds are divided into several kinds of categories representing the kinds of securities they invest in, their investment objectives, and types of returns they seek. Mutual funds are operated by professional money managers who allocate the fund's assets and attempt to produce capital gains or income for the fund's investors. Mutual funds charge annual fees, expense ratios, or commissions which may affect overall returns. So mutual fund is, if you aren't that professional in making decisions, then you can go invest it as SIP in mutual fund, and there'll be a fund manager who will invest it in diversified funds and giving you an opportunity for getting returns from diversified investments. Then comes real estate. Real estate is considered real property that includes land and anything permanently attached to it or built on it, whether natural or man-made. There are five main categories of real estate, which include residential, commercial, industrial, raw land, and special use. Investing in real estate includes purchasing home, rental property, or land. Nowadays, indirect investment in real estate can be made via real estate investment trust or through pooled real estate investment. Next comes insurance. Before we go to insurance, let's just recap on what we have discussed till now. So we have started with learning objectives, then we went on to see why we need savings, be it emergencies, future wants. Then we discussed we need to increase the amount we save proportionally as income increases, and before marriage make maximum savings. Then we discussed needs and wants. Then we discussed about bank. Then we discussed the tips for saving, that is make budgets first, transfer savings next, and then spend money wisely. And that your expenses should be always less than your income. And then we have seen investment returns after taxation should beat inflation. Then we have seen the opportunity cost of bad habits. Then we have seen the power of compounding when you start investing at early age. Then we have seen the types of investments. So this is all about investments. But before investing, there are few things that you need to take care of. First one is insurance. Insurance is an arrangement through which one can plan for the continuation of income when certain events like disasters, illness, accident, death, or old age may disrupt one's ability to earn his or her livelihood. Having insurance is must for secured life and should not be seen as an investment product. See, someday you might be diagnosed with some critical illness, or even you might die in an accident. Then what about your family? So the one that acts as a cover in the situation of uncertainty is insurance. So there are various types of insurance, and I'll discuss few kinds of insurance that you need to have. The first one is adequate life insurance cover, called term insurance. Don't go run behind endowment plans, money back plans and all. Just prefer term insurance. And term insurance must be minimum 15 times of your annual income. Nowadays, you can get coverage of 1 crore by paying just 750 per month. It will be 750 plus taxes something. So get insured at an early age for lower premium. Next thing to have is an adequate health insurance with a floater or umbrella cover that covers your entire family. Next important thing to have is the vehicle insurance, and the other types of insurance are, there are two major government insurances that are Pradhan Mantri Jeevan Jyoti Bima Yojana and Pradhan Mantri Suraksha Bima Yojana. Then we have the life cover under Pradhan Mantri Jan Dhan Yojana. When we opened the Jan Dhan accounts, even then insurance was provided. And then there's Pradhan Mantri Fasal Bima Yojana, or restructured weather-based crop insurance scheme for agriculture related crop output insurance. And then we have Pradhan Mantri Vayavandana Yojana, and then we have Ayushman Bharat Yojana. Ayushman Bharat Yojana is for the health related, and Pradhan Mantri Vayavandana Yojana, as we discuss, is a going to discuss, will be a pension scheme. So, as I said, pension. What is pension? Pension is important to know how much money one will need for retirement, as can vary with one's individual circumstances. Life expectancy, inflation, and retirement age are some of the key factors to be taken into consideration while calculating retirement needs. If you plan to retire early, then you need to build huge corpus, as the number of years you would be dependent on pension would be more compared to if you retire late. And also inflation also comes into role. The number of years you will be unemployed, you will be spending your retirement life. So inflation is the rising cost of consumer goods and services. It affects one's retirement needs in two ways. The cost of goods increases, which means buying the same amount of goods becomes costlier. Second, due to inflation, retirement savings also lose value. Both these factors must be taken into account when a retirement corpus is created. Corpus created for retirement, that is then invested for regular monthly return as a pension. So what actually happens when you retire is you take this corpus and you invest it in a product so that it will be a systematic withdrawal plan, such that it will give a regular monthly income. So the created corpus should be such that it is at least 15 to 20 times of your annual income to be safe against inflation and live a comfortable retired life. As we discussed, so various pension schemes are National Pension Scheme, Indira Gandhi National Old Age Pension Scheme, Atal Pension Yojana. So moving ahead, next is financial regulators. So as we discussed about banking, so who regulates banking? RBI. We discussed insurance. Who regulates insurance? IRDA. We discussed shares, mutual funds, bonds. It is regulated by SEBI. We discussed pension. It's regulated by PFRDA. So what is regulator? The financial system in India is regulated by independent regulators in areas of banking, insurance, capital markets, and pension funds. Every regulator is instrumental in making sure that the interests of investors and all other parties are not compromised and that there is fairness in the financial system of India. They are all there to ensure parity and responsibility among participants in that particular subsector. So, you might be worried what will happen to my investments some days in the future. So, regulators are the ones that ensure you nothing is going to happen, and these are the avenues where you are safe and secure, and you need to sit back home, relax, and you can have everything in place. As financial regulators are there to take care of it, the financial system. Next, when you take a loan, repay it on time because there's a CIBIL, Credit Information Bureau Limited, which is the India's first credit information company. So, what is CIBIL? CIBIL actually collects and maintains records of individual payments pertaining to loans and credit cards. So, you might be thinking, why? What will happen with this information? This information is then used to evaluate and approve loan applications. So, once you take loan, your CIBIL will be started to be calculated. So again, next year you might be requiring additional loan or enhanced loan or something. So then, as CIBIL tracks all your loan records and history of repayment loans and credit cards. So if your repayment history is not good and you approach bank for additional loan, then you would be charged high rate of interest. So if you are disciplinedly repaying loan on time, then you will be provided with the best interest rates, so that it's not detrimental to you. So any irregularity, however small, is tracked and reported by CIBIL, making application for further loans difficult. So keep it in mind. Next comes the Reserve Bank Integrated Ombudsman Scheme. So what is Ombudsman? Ombudsman is nothing but you might be facing some issues, facing some complaints. See, everything doesn't go smooth. You might be making a transaction and it might fail, or some fraud might happen. So, as we said, financial regulators are there to address our troubles. The ombudsman scheme is one where you can file your complaint. The scheme enables the customers of regulated entities like banks, non-banking financial companies, payment system participants, and credit information companies to register their complaints at one centralized reference point. The objective of the scheme is to resolve customer grievances involving deficiency in service on part of REs in a speedy, cost-effective, and satisfactory manner. A complaint can be filed through online on CMS portal of Reserve Bank of India at cms.rbi.org.in, or complaints with full details can be sent by email to crpc@rbi.org.in. The status of complaints can be ascertained by contacting the toll-free number 14448. Next, beware of frauds. Never invest in Ponzi schemes or multi-level network marketing schemes. Never take loans through informal digital channels. So you need to be aware of frauds. Do not share your following bank details with anyone, be it card number, CVV number, PIN, OTP, password. Beware of fraudulent calls, since bank will never ask for your account info or will never say you to update your PAN details. Sharing your details can lead to fraudulent transfer of money from your account. So beware of frauds, and again, never invest in Ponzi schemes or multi-level network marketing schemes, because money never comes easy, and at the end of the day you will suffer. Because there's no free money, no easy money, there's no high level returns. Everything is disciplined. Never take loans to informal or digital channels. Now there are a lot of Chinese apps, and you might fall into that trap. You might be requiring sudden loan, but never approach those channels, because you might be taking 10,000, but you might be forced to pay 30-40,000, and even after that they won't be satisfied, and they will, once they sanction your loan, then you will be downloading their application, right? Then they will be taking your entire access to your phone. They will be taking your photographs, whatnot, and at last they will trouble you hell like hell. So next, as I said, do not share your bank account login ID, password, PIN, or OTP with anyone. Never respond to message offerings or promising prize money, government aid, and KYC updation. Do not give your ATM card to anyone for withdrawal of cash. Never write the PIN on your card. Do not download any unknown application on your device. Do not take help from strangers at ATM. Always cover the ATM keypad with your hand while keying in the PIN, because there's an ATM blocking that happens. You might not be aware. You might go to ATM, you might keep your card, and you might have type the password, the money would come, and you might think the ATM is not working and you might leave. But what actually happens is the scammer might be standing behind you. He would have earlier itself kept a blocking chip, and when you keep your ATM card and do the transaction, no, then as the chip is already in place, it won't allow the transaction. But as gets your he stands at your backside and sees the key, your ATM pin. Once you leave, the card details will be cloned with the chip, and he will use that chip, and he will type the pin, and he will take away the money. So be aware when you use ATMs. And also, if you scan the QR code on the left, you will be taken ahead to Be Aware booklet published by RBI. And if you scan the code on the right, you will be redirected to the integrated ombudsman scheme that we discussed. Next comes security features of banknote. So why do we need to know security features? Is there are a lot of fake currency being circulated in market. Why fake currency? Fake currency is generally created to finance the drug dealers or terrorists or whatsoever, the illicit mafia of the country. So we need to be very careful when we accept the currency notes, because if a fake currency comes to your hand, your hard-earned cash value will turn to zero. You might earn 500 in the entire day, and you would have went to the market and you would have bought some good for 100 rupees, and then you might have got 200 rupee notes, let's assume. And if those 200 rupee notes are fake, your 400 rupees earning becomes zero. So to identify the genuine note, you need to know security features of banknote as they're shown in the slide. The first one is the see-through register, which is on the top left side. So which is so on the left side, when you on the top of the note, on the top front side of the note, on the left side, you can see the see-through register. If you keep it against the light, you can see the back-to-back printing. Next comes the latent image. It's the photo like black one that you see in the bottom. So it's actually photosensitive. So it might seem like a floral pattern, but when you keenly observe it, if it's 500, there'll be 500 in it. If it's 200, it'll be 200. If it's 100, there'll be 100 in it. Next comes the numeral in Hindi. Next comes the portrait of Mahatma Gandhi. And there's a micro lettering Bharat and India in the portrait of Mahatma Gandhi shawl, which you can see with a magnifying lens. Then there's a color shift windowed security thread with inscriptions Bharat and RBI. Color of the thread changes from green to blue when the note is tilted. Then comes the guarantee clause, which is signed by governor of RBI with promissory clause. And then there's an RBI emblem towards the right of Mahatma Gandhi portrait. Then there comes the Mahatma Gandhi's portrait and electrotype watermarks. As and you can observe the letter specimen in the note shown, right? There you can find Mahatma Gandhi's watermark, and to the right of it there'll be a 500 watermark. If 500 note, if it's 200, it'll be 200. If it's 100, it'll be 100 watermark. Then the number panel will be font will be increasing in the ascending from top left side to bottom right side. And then there's a denomination numeral with rupee symbol in rupee 500, color changing in green to blue on bottom right. You can see rupees 500 printed in green, right? It will change to blue when you tilt it. It's called color shifting ink. Then there's an Ashokan pillar emblem on the right. Then there's a feature called intaglio or rise printing of Mahatma Gandhi print portrait. Then Ashokan emblem, pillar emblem, and then what's this intaglio printing for? It's for visually impaired people to identify the what denomination note it is. As I said, for them to identify the note, there'll be a rice print on Mahatma Gandhi, Ashokan emblem pillar to make them aware it's a note, and then there will be a how can they identify denomination. So it's like in 500 there will be a circle as shown above Ashokan emblem, and in that 500 will be printed. If it's 200 there will be H and 200. If it's 100 there will be a triangle, and in that the 100 will be printed. And also you can see the 5 angular bleed lines, right? It is one more feature that makes them aware it's 500 note. If it's if if it's 200 there'll be 4 squares and 1 circle. So the same for 100 it differs. So for each node there's different pattern of angular bleed lines which will make you aware which denomination node it is. Then on the back side of the node there will be an year of printing, there will be a Swachh Bharat logo, there will be a language panel, and there will be a Devanagari number on the top as shown, and there will also the motif that is printed varies. It's red 4th in 500, Ranika Vav in 100, Ellora in 20, so it varies. So these are the various features of banknote that you must know so that you will be able to identify the genuineness of note when you accept it in the market. Then comes the facility for exchange of notes and coins. All branches of banks in all parts of the country are mandated to provide following customer services more actively and vigorously to the members of public so that there is no need for them to approach RBI's regional offices for the purpose. First one is issuing fresh or good quality notes and coins of all denominations, exchanging soil mutilated defective notes, accepting coins and notes either for transactions or exchange. All branches shall provide the above facilities to members of public without any discrimination on all working days. All kinds of banks have been delegated powers under the Rule 2J of Reserve Bank of India Note Refund Rules 2009. Now they are amended with the rules in 2018 for exchange of mutilated defective notes free of cost. So what is mutilated defective notes is you might be having notes in your pocket. They might not look good due to the excessive wear and tear, excessive usage. So if the note portion is not missing, or if it is not more than 2 pieces, then it is a soiled note. So when if the portion is missing or if it's more than 2 pieces, so be it 3 4 pieces stick stick by some tape or something, it's a mutilated note. So you can approach any bank with the notes. For soiled note, you will be provided the entire value of the note. If it's a mutilated note, you will be provided with the value depending on whether it's half value or reject or full value following the rules, and you will be given the fresh notes. So when you have old notes, that is with those with excessive wear and tear, you can approach any bank so that they will exchange it and give you the good notes. So now let's have recap on what we have discussed till now. After power of compounding, we went for the types of investments. We discussed the investments, and then we started with insurance, have the need for having life insurance, health insurance, vehicle insurance. Then we discussed about the pension, the inflation scenario. Then we discussed the financial regulators. Then we discuss CIBIL. Then we discuss Ombudsman scheme. It's cms.rbi.org.in if you want to file a complaint. Then beware of frauds. Never investment in Ponzi schemes. Never take loans through informal or digital channels. Then we have seen the do's and don'ts. Then we have seen the security features of banknote. And then we have seen facilities for exchange of notes. Again, I appeal to all of you, never fall trap to the digital money loan apps. There are a lot of formal channels where you can get the credit needs that you have. Please approach the banking system instead of falling in prey to the illegal digital apps which will suck your blood. Next, we will be seeing few of the campaigns that are being run by RBI. So, as I said, exchange soiled, torn, damaged, mutilated, or defective currency notes at bank branches over the counter. Adat badlao, note badlao. Currency notes can be exchanged in your nearby bank branch, as I said. Next, see, no, if someone denies to exchange your note, then there's an integrated ombudsman scheme as we discussed, and you can file a complaint. And then comes the next, digital payments can be made from anywhere and almost everywhere. Digital payment up now, auron ko bhi सिखाओ. Register your mobile number and email with your bank to get instant alerts. Do not store important banking data in mobile, email, or wallet. So never keep your passwords in your phones written somewhere or something. Change banking passwords and PIN regularly. Block your debit or credit card immediately if it is lost. So register your mobile and number and email so that whenever there's a transaction, you will get MS instant alert so that if you haven't done the transaction, you can immediately report it so that we can freeze. Then comes the Reserve Bank Integrated Ombudsman Scheme, single window for complaints against entities regulated by RBI. Complaints not resolved within 30 days or not resolved satisfactorily by banks, NBFCs, system participants regulated by RBI can be filed with the Ombudsman. Lodge your complaint from anywhere, anytime through cms.rbi.org.in. Next comes an important cautionary advice. You need to scan QR codes for sending money, not for receiving money. Be aware of it. You should never scan any QR code for receiving money. Do not scan QR code or click links received from unknown sources. Entering PIN or OTP is not required to receive money. RBI कहता है जानकार बनिए सार्थक रहिए. Next comes another funda. Do not risk your hard-earned money. Unsolicited emails, calls, and messages about winning a lottery are fake. Unbelievable gains could lead to unbearable pain. So here are various few other things that you can refer later so that you will be more aware of what to do, what not to do. Then beware, high and quick return schemes could be risky. Invest your money wisely. As we said, there's no free money. Don't fall trap to the high returns promised through unsolicited sources. And again, never share your password, PIN, OTP, CVV, UPI PIN with anyone. Register your mobile number and email with your bank as discussed earlier. Avoid banking transactions through open or free networks, Wi-Fi networks, because cannot be secure. And then block your ATM, credit, debit cards, and prepaid cards immediately if they are lost. Next comes, as we said, get instant alerts for all banking transactions by registering your email and mobile number with the bank for instant alerts, and be safe from frauds. Next is the set transaction your cards to reduce risk. You can enable the limits on your cards. You can disable the international payment transactions so that you can be safe. So please set the transaction limits, and you please set the limits on the international transactions also if you wouldn't be requiring them. Then you can now invest directly in risk-free government securities on a click through RBI Retail Direct. Then don't make the mistake of dealing on unauthorized forex trading platforms. Don't be lured by claims of high returns. Only transact through authorized forex dealers. Next comes mobile aided note identifier app. As we discussed, there's an intaglio printing for visually impaired people to identify the note, right? Suppose a person is a deaf, dumb, and blind. There's an option for him. There's an app developed by RBI. He can scan a note, and that mobile app identifies the denomination of it. It doesn't authenticate it, it will never authenticate the genuineness of note, but it can say which denomination it is. And the major feature with this is it will say it will say in voice what denomination note it is, and it will also give vibrations what denomination it is. So it helps the impaired people so that they are empowered to know what note it is. They can identify the denomination. It's MANI app, mobile aided note identifier. Then comes the another important next comes another important notice for you all, that is coins of different designs in same denomination remain in circulation at the same time as coins have a long life. Accept them without hesitation. You might be heard that 10 rupees lot of designs are there. This denomination is fake, this denomination is original, like that. See, every denomination is original. Every year RBI changes the design with the approval from government. So government actually mints the coins, so RBI just circulates them. So once the decision is taken about the coin design and all, so as the years change, we will be coming up with different initiatives. Like now, we were having Azadi Ka Amrit Mahotsav. So then an ACAM design came. Earlier, there was a visually impaired series. So before that, there was there'll be some event like there was about the diversity and also every year there'll be some different design to make the mark the significance of that years. So every time they'll be changing the designs, but as the coins shelf life is more, they will be circulating. So there's no design that is to not to be accepted. There's no design that is to be accepted. Every design is legal. Accept them without any hesitation. Do not believe in misleading information about coins. And then banking is easy. Open basic savings banking deposit account, BSBD account. No minimum balance required. Easy to open with just Aadhaar card and PAN card. So there are few other details, few features of BSBD QN here which you can refer. So before we end it up, I'll once again take you through the things. Do exchange notes because RBI has clean note policy where we want you to have good notes, and we are with the infrastructure to mop up the old notes. So please do exchange whatever soiled, torn, damaged, mutilated notes that you have with you. Become digital. File your complaints through Ombudsman. You need not scan or type PIN for receiving money. Do not fall trapped for unbelievable returns or gains as they are risky. Never share your password, PIN, OTP. Block your card if it is lost. Register your email, mobile number with your bank for instant alerts. Set transactions on your cards. Be disable the international if you require. Then you can invest in government securities through retail direct. Then only trade through authorized platforms. Then it's money app. Then all design coins are legal. Then banking is easy with BSBD. So this is all what we have learned today about the finance education. So you would have got a fair idea about what kind of investments you can do once you create savings so that you will be able to achieve your large long time horizontal goals. And you please take insurance, pension, everything into consideration once you have it appropriate arrangements for insurance and pension, then make appropriate investments to meet your long-term horizon wants. So your primary focus will be on needs, so that you will be curtailing expenses, and once you are in a comfortable position, then you can think of the wants. So thank you for attending the session. Have a good day.